everybody is now thinking, how do we remodel how we've worked over the last 30 years with the revolution of kind of agentic AI and what's coming ahead of us? And that's where current platforms are essential in order to survive this transformation that is coming.
Hi folks, James here, and welcome to the Spiro Circle, this time in collaboration with Forbes Israel. When you think of the industries that need digital transformation, finance is up there alongside all of the others that may need to be modernized and brought into the digital era. But it's a famously conservative industry because of regulations and sensitivities about dealing with money and cross-border payments and all of the things you would expect. This week I spoke to FundGuard, a company that acts as a kind of infrastructure software for the asset management industry. It's an industry that needed big overhaul when it was brought into the digital era because a lot of the plumbing that was in its place to help with its infrastructure was kind of decades old. I spoke to co-founder and CEO Lior Yogev all about this. He and his two co-founders met 30 years ago in the Israel's 8200 unit in the IDF, and they came back years later to co-found a company that addresses this very issue. Anyway, we spoke all about the finance industry, we spoke about their story, and we spoke about how some of the ways these technologies can help everyday people with their retirements way into the future. I hope you enjoy. Lior, thank you so much for taking the time.
Thank you, James. Great to be here today.
I want to best understand where you guys are coming from with FundGuard and all of the things that you are doing in the space, because most people assume that finance is cutting edge and new and innovative, but actually a lot of the infrastructure there is quite ancient. So talk us through a bit about what FundGuard is doing and how you are changing some of the foundations that are in place, please.
Yeah, so really kind of, for me also before getting into the industry, the assumption was that kind of, finance just works, right? I didn't get really to kind of think about the plumbing, but the reality is that, in finance in general and, specifically where we are in capital markets, in the post-trade space, which means everything that happens after the trade is made, a lot of the kind of underlying infrastructure was built in the 1970s and 1980s, where the industry was kind of, very different than where it is today. People were mainly trading in plain vanilla equities or kind of, bonds that are very simple. But the industry has changed a lot in terms of the variety of assets, the kind of complexity kind of that's involved in it, the regulatory framework just demanding kind of more, and the volume of trade is just kind of, spiraled out of control, right? So the systems that were built back then don't kind of fit the needs of today. So FundGuard really provides a modern investment accounting that's kind of cloud first. We're leaders in AI, and really kind of we're not reinventing accounting, but it's just how do you do it at the scale and complexity that exists in the industry today?
Wonderful. Thank you. I want to give some kind of overview figures and just some facts, just so our audience is aware of all of the context going around. So you guys were founded in 2018. There's three of you, three co-founders, Lior, Yogev, and Uri. You all met, I don't want to age you, but you met, 30 years ago.
30 years ago, yeah.
Sorry, yeah. You met 30 years ago in the army, but we'll get back to that in a sec. We'll go back to that. You have offices in Tel Aviv, New York, Boston, London, Toronto, and you've raised more than $150 million. So
that is right. We also have a Dublin office now.
Oh, and a Dublin office. Great, thank you. I was just going to ask you if all of that information was up to date and if there were any corrections. So you also have a Dublin office. So you folks are well established. I want to understand why it took so long for the industry to undergo some of the changes that it's going through. So there's clearly you guys clearly have a lot of momentum behind you, but why was now the moment?
Yeah. So really, when you look at the industry, right, kind of, assets have been kind of, climbing kind of more than kind of GDP kind of growth kind of year over year. And the industry today is kind of more than $200 trillion of kind of assets under kind of essentially ownership and under management. And there's really kind of been a lot of evolution in terms of, as I said, kind of the volume of trades, the complexity of assets from equities and bonds into derivatives and over-the-counter kind of products, and now kind of in private markets, that's kind of very growing, kind of whether it's private credit or private equity or infrastructure. All of those are kind of growing significantly in terms of the assets under management. And kind of the technology that's been used kind of is there from the 1970s, 1980s, and probably the latest kind of before kind of our cadre started was kind of the 1990s kind of applications. And the reason is that kind of the customers, whether it's asset managers or the fund administrators and banks, they're highly regulated financial institutions, and therefore kind of the kind of, I would say, willingness to take risk is kind of more limited, and everything has to be validated. We're dealing with people's ultimate kind of money and how much money they're going to have in retirement. So kind of every cent matters, right? And you can't get the numbers wrong. It's not just kind of sheep fast and kind of break stuff. You can't do that kind of when you work with these large institutions that have fiduciary responsibility to investors. And it's also a very complex kind of market, right? So it's not just any kind of a CS grad kind of coming out of whichever kind of top university it is, kind of saying kind of one, it's probably not the kind of most kind of compelling kind of use case that people want to go after, right? Versus social media of the kind of 2000s and kind of cloud and kind of SaaS, whether it's CRM or other solutions kind of in 2010s. Or kind of the new fintechs that are trying to capture the ultimate kind of B2C kind of investor. We're really kind of servicing the industry's kind of giants, right? Whether they're the banks or the asset managers. And they just kind of, one, cannot move very fast. Two, just the complexity in terms of the assets that they have across the globe, across all types of assets. It's just very complex, and there's no kind of, simple MVP. And there have been attempts throughout the years, but those have failed. And I think kind of why now and why FundGuard has succeeded in terms of kind of getting initial penetration is because the kind of, cloud, true cloud and SaaS model has allowed a different paradigm, right? Where we can create a utility that's used by many in the industry. And that's why we can spread our costs kind of across many players rather than kind of, the old model where you had to kind of, produce software, send it to the customer, they would deploy it, they would do a lot of testing. I can tell you the legacy systems that are still kind of intact in the industry, they're still kind of the leaders. We still have long way kind of, or long, a lot to grow in. Those of essentially kind of you can upgrade them kind of once every 2 years, right? That's just how arduous the kind of upgrade process. And for them, because the system is built in COBOL or other kind of archaic solutions, they move very slowly. So kind of for us, just kind of the adoption of cloud within these large financial institutions finally kind of beyond 2015 allowed us kind of to come in kind of as a true cloud solution that kind of eliminates a lot of the barriers, but also kind of our unique go-to market. We started, rather than saying we're going to tear everything and replace, we started with a backup solution, really kind of very pointed solution to produce an oversight and contingency solution for production of NAVs for funds. And it's really NAVs is the valuation of the funds. And that presented for us an opportunity to come in with a baby step, and not saying kind of we're trying to replace everything, but let's do something small, prove that it works. And from there, you have an opportunity to really kind of, now you're connected, you're ingesting kind of all of the data, you're producing daily information, you come to trust it. That's why institutions then are comfortable taking it to the next level and saying, okay, we're replacing our legacy platforms and moving on to FundGuard, and that's going to enable the transformation that we need, whether it's kind of, just kind of better operational efficiencies, whether it's kind of leveraging of AI, or just kind of, plain modern workflows and kind of control framework.
Okay, wow, wonderful. So you really kind of outlined there the stages of the transformation. So that's super helpful. Now, obviously, you guys started in 2018-ish, 2017, 2018, give or take. That's like a million years when you look back on all the things that have happened in terms of pandemics and wars and just kind of there's so much volatility and unpredictability in the world. There were, I mean, like undeniably, there were stress tests during this, whether it was COVID or the collapse of the Silicon Valley Bank or anything like that. It's just things that are completely out of control. What do moments like that happen in the world, what do they reveal about some of the systems that are in place, whether or not, whether before they underwent digital transformation or now post transformation? What can you tell us about how some of these stress tests in the world cause these systems to react?
Yeah. So kind of really kind of, when we talk about the kind of legacy stack that a lot of, asset managers and banks still kind of have in production today, we've seen kind of in COVID was a kind of, case in point. Suddenly kind of everybody was home, kind of trading levels kind of in March of 2020 went kind of through the roof. The level of a number of exceptions, the market was also very volatile, kind of, very obviously. And kind of, just the level of exceptions and kind of all the alerts that people got were kind of, at a heightened level. I think kind of people have told us it was kind of, at least kind of 50% up every day. And it's not like these institutions had more people kind of to handle all these exceptions. They actually had fewer people because some people were sick, some people were kind of, just kind of, unable to work because of everything that was going on in the world. And they had to do much more with actually less. And that kind of really showed that kind of, the legacy systems were built kind of, they sort of work on a day to day, but when you have kind of, slight deviation from the mean, the systems are very reliant on kind of a lot of people, right? Because they do the bare bones on technology and it's kind of, they use it as a system of records, but a lot of the processing, because of these legacy systems have not evolved, was happening offline, right? In Excel, done by people. And kind of, in times like that, you see how kind of, just kind of the technology has not kept up with the needs of the industry of today. Another example is kind of not necessarily related to kind of, those specific kind of incidents that you mentioned, but, there have been kind of both technology glitches where kind of, a legacy system just kind of, the servers kind of crashed and, a large bank wasn't able to bring them up from disaster recovery. They had kind of, an operating system issue. And kind of really last summer, another kind of situation where we faced and clients asked us to help them, where they were using a system that was kind of essentially breached in a ransomware event, and kind of clients didn't have access to their financial information, which meant that they couldn't keep kind of trading and valuing their assets. And, those type of stresses kind of, whether it's kind of a global kind of or a systemic issue or just kind of, something that those legacy systems kind of experience, present kind of, one, an opportunity to see where there are kind of the model really doesn't work, doesn't scale. And two, why kind of, modern platforms like FundGuard are the way for the future. So you're kind of, future proofed in terms of the technology and architecture and the way kind of, you need to be kind of set up for disasters or things that go off the rail. But also what you need in terms of scaling, right? And kind of, as you prepare for where kind of the new age with AI is taking kind of the world, with the legacy systems, because they're such kind of monolithic and batch based, they just don't carry the weight and can't kind of really interact with the infrastructure that kind of, is being kind of, as we speak, kind of being built in the world. And that's where kind of, really for us, we're seeing kind of, a continued kind of increase in the traction that we're seeing with customers. And I would say, over the last 3 months, I've been barely home, kind of traveling, kind of to see a lot of kind of clients and prospects. Everybody is now thinking kind of, how do we remodel how we've worked over the last 30 years with the revolution of kind of, agentic AI and what's coming ahead of us. And that's where kind of, modern platforms are essential in order to be able to kind of, move at kind of actually survive this transformation that it's coming.
Do you find that when institutions are hit with these stress tests that invite this form of change that you've just outlined, do you find that generally the rate of change, the modernization, is that accelerated, or do they just enter it with a bit more caution? Like, what is it? Because the way it sounds, it sounds like they know they're supposed to modernize, but when these moments come, is it like does it accelerate their need for change, or do they retreat more? Like, what's the human or business reaction?
So it really kind of depends, like a lot of things. Kind of people kind of when the thing happens, kind of it gets everybody's kind of kind of share of mind, but then they're still kind of under the burden of kind of tight kind of regulatory kind of oversight, and kind of ultimately kind of not the fastest of movers in financial services. And I think it needs to change, right? Because it's there to protect investors, but it's also really hindering kind of what they're doing. So obviously you do not want to crash, you do not want to expose kind of all your data to kind of bad actors, or kind of let them infiltrate systems. So there needs to be absolutely kind of a certain kind of a level of kind of a check. But I think it's slightly kind of exaggerated and more kind of CYA rather than kind of looking at the real benefits. I would say that kind of both kind of cloud kind of the transformation, and we started seeing that kind of when we started in 2018, as you mentioned, kind of around there, and around kind of COVID, there was a big push, and kind of now you're seeing more and more core platforms used by financial institutions that are in the cloud. They just kind of obviously have to verify that kind of all the kind of disaster recovery kind of plans are there, and that the security is there. But they've learned how to kind of work kind of in the cloud, because it's essential, right? Otherwise, you're just not kind of scalable and cannot survive kind of the change that's happening in the industry. I think that even more so now with AI, kind of everybody's kind of really kind of starting to understand kind of the rate of change that's coming, and that will have to come, and that if you don't do it, you're essentially going to die. And that's why we're seeing kind of even heightened level of willingness to experiment. I would say kind of it's at the experimentation level. A lot of large financial institutions, why they get excited by kind of the AI capabilities that we show, and kind of they kind of can clearly envision kind of the future that's going to be totally different than the way that they've been working the last 2-3 decades. They're still very cautious, right? Kind of most kind of large financial institutions are going to ask you to kind of turn off or disable kind of the use of models, kind of at least at this stage, and kind of not even kind of use their data in an anonymous kind of way. I think there's still kind of making sure that kind of with AI, that there's no data leakage, that there's no kind of a creation of penetration points for kind of bad actors. But it's very clear that just like with the cloud, it took kind of a few more years to be kind of fully embraced by financial institutions. It's going to be the same with AI. So everybody is looking at kind of what we're delivering and gets very excited, and they go with us because they know that we future-proof kind of where they're going, kind of going to be in the next kind of 3, 5, and 10 years. And they're still kind of not necessarily using all of the capabilities that we're able to offer them, just because of that caution. But just like everything, right, kind of it takes time. You kind of develop the right governance models, and then you're kind of at a point where you can kind of really leverage the power of the kind of new technology and new frameworks to kind of move to the next level.
Okay, wonderful. I'm going to stop you there. So I'm going to give you an opportunity to catch your breath. and maybe grab a glass of water. I want to go back now. I want to humanize it a bit more. And I want us to talk a bit about the founder journey that you folks had. So we alluded to it at the start of this interview. There's three of you, and you met 30 years ago in Israel's 8200 units, the intelligence unit. But you didn't work together right away. So you guys met, went, a few years ago, you went your separate ways, and then you came back for FundGuard. So talk me through a bit about how you folks met, how the three of you met, some of the things you shared, and then what brought you back together for this venture.
Yeah, I should send you kind of a photo from when we were 19 years old, kind of, officers in.
If you send it to me, I'll put it on the screen.
Yeah, you know what? I need to. I'll look for it. I certainly kind of know where the album is. So I'll look for it and maybe send to you. But basically, kind of, we kept in touch throughout the years. Kind of, I studied in university, kind of with Yaniv, and kind of. Then I kind of moved to the US, kind of, where I started in financial services, and Uri and I moved more into kind of the business side. Uri and Yaniv stayed true to their kind of, technology origins, and kind of, when kind of post selling kind of the previous company, multi-funds, I stayed on board for 3 more years to continue and grow the business and help kind of with the integration of the business. But kind of really had kind of an urge to start something of my own, something that I'll be proud of. And I really loved the industry that kind of, I was in. And I thought that kind of with modern technology, you could really address a lot of the challenges that I saw kind of across the globe with the world's largest, $1 trillion managers and kind of, a lot of large banks. And that's why it kind of made sense kind of for me to reconnect with Uri and Yaniv on this specific idea, because we all kind of brought our own kind of unique value propositions into this that really complemented each other. So I came kind of most recently kind of, with deep kind of product understanding of the market, but also knowledge kind of, of finance and sales and marketing. Yaniv at the time was head of R&D for Salesforce in Israel. He had sold them his previous kind of, he spent 15 years in the intelligence core and then built a startup that was bootstrapped and generated sales and marketing insights with machine learning algorithms. He sold that to Salesforce and built their R&D center in Tel Aviv. So he was really living kind of, the enterprise cloud at scale. And kind of data science. And Uri was working kind of for a fintech firm doing kind of their financial algorithms. So he was connected kind of as a builder and an algorithm kind of a guy in financial services. So all of those kind of really meshed well together in terms of the problem that kind of I presented to them coming from the industry and having seen kind of what's going on. And kind of we were always kind of good friends, and it was an opportunity to now kind of, finally work, right? Kind of we've had conversations throughout the years about maybe doing this or doing that, and it never kind of really came to kind of to life until kind of, FundGuard was the right opportunity and at the right time, right? Timing really matters, right? So Yaniv had sold his business to Salesforce. He was there for kind of, 5-6 years and was kind of, looking kind of to do the next thing. Uri kind of, was first kind of working for large companies that moved to startups and kind of really loved the financial kind of services industry, and kind of really the connection around this and the opportunity and the transition kind of, from on-premise to kind of a cloud, and kind of, the start of movement around AI kind of, in 2017, 2018, when we're starting kind of to talk about the idea for kind of, FundGuard. We didn't even have a name initially. It all just kind of, very fortuitously kind of, came together at the right time. So kind of, timing matters, kind of, knowing people and kind of recognizing where their kind of, experience and strengths are, and kind of, is this kind of a good, kind of going to be a good team that kind of really complements each other and can work together through a lot of things that are unexpected, just like you mentioned, COVID or kind of, or wars or, financial collapses. there's a lot of things that you don't expect that are going to happen during the journey of kind of, building a company. And kind of, it's great, kind of very lucky to be able to do it with friends. It's obviously kind of, stressful, and there are days where we get upset at each other, but kind of, just like call it like a good kind of friends, right? We're able to kind of, overcome these where it's a kind of, exogenous or kind of internal kind of issues that we have. We're able to kind of get over those and just focus on the long-term kind of success of the company and what's the mission. Are we still doing the right things? And that's always been kind of the what's kind of how we kind of ultimately make decisions is what's kind of what's the right thing for the firm in the long run. It's not kind of a personal thing. It's all kind of how do we make this kind of the biggest success as we envision it kind of initially, but also as the kind of mission has evolved over time, given kind of the opportunities and kind of things that happened in the market kind of during this journey.
Wow, that's amazing. And it's so great to hear that a story of friends who come together well, I mean, not that you ever went away, but professionally.
Yeah. But it's very different working with each other day in, day out, and it's not short days, right? It's very long days, and a lot of challenges that come kind of along the way, right? And it's very different when we're kind of first 3 people kind of working kind of in a small office, then kind of 10 people, and then kind of 30, and then 100. The kind of the opportunities and challenges kind of really change, and by having people that you really trust that are going to be kind of cerebral and ultimately kind of make kind of the best decisions for the success of the company, kind of over their own kind of just ideas or preferences, kind of ultimately I think is very important. And that kind of connectedness and kind of tight knit kind of relationship is helpful kind of to get through days that can be kind of challenged.
Definitely. I want to take us now to the next part of our conversation, which was something we mentioned on a pre-call that we had before this interview took place, just when we spoke ahead of this, which is the end goal for a lot of, if we were to bring it back to FundGuard and some of the help that you folks are doing, it's to bring it to the end goal, which is to help with a lot of people's retirements and savings and some of the areas there that people may not be so, in the moment contemplating kind of now, but it matters to them years down the line. So funding and accounting and financial infrastructure, it all sounds very mechanical, but actually it's really helping achieve something very human, which is, the time in our lives at the end. How do you think about that? How do you think about like some of the ways that you folks are helping these places accomplish those needs?
Yeah. So, ultimately kind of you and me are all kind of, we're all saving kind of, money to achieve our life goals and ultimately for retirement, and kind of, as longevity kind of, grows and people are going to live for kind of, more decades in the out years where they're kind of less productive in the workforce, they're going to need more money to kind of, fulfill their kind of objectives in retirement, whether it's to spend time with family, to travel, do things that they always wanted to do and never had time for, right? Different projects, but just kind of live kind of in dignity. We take kind of the ultimately kind of investors' money kind of very seriously. And it's also our money, right? Kind of, we're also kind of just like anyone else. And in the US alone, it's a huge market, but more than 100 million people save for retirement through kind of the use of or buying kind of mutual fund stocks, right? So that's a kind of a common way of saving, whether it's 401ks or other kind of savings plans that are out there. The performance of these kind of products that they're buying kind of really matters in the end, right? So whether it's kind of the actual kind of alpha that these products produce, they're more successful in terms of the kind of the investments that they make, but also in terms of running these costs, right? So think about kind of a mutual fund company. In the end, it has kind of analysts, it has offices, it has kind of legal and administrative costs. And the more kind of we can help bring those costs down, that ultimately helps those companies charge less for the use of for buying kind of those products. And it really matters, right? If you can shave kind of even 0.1 or 0.2% kind of those fees, right? But just kind of doing things more in a more automated fashion, kind of giving more transparency in a faster way, allowing kind of portfolio managers and traders to be smarter about the decisions kind of that they make and just kind of more efficient. Those ultimately can translate to kind of anywhere from $50,000 to $100,000 kind of more on average per person in retirement, and those kind of numbers, while they're not kind of you're not getting kind of a super rich kind of by having another $100,000 in retirement, for most kind of people and in most places where people retire, that is a huge difference, right? It can be a significant multiplier over the outcome that they actually have kind of today. And for us, ultimately, the way that we think is, what is ultimately the kind of investor looking for? Because this is what we ourselves are looking for, right? They're looking for better, cheaper, kind of more transparent kind of investment products. And by having kind of better technology at the core that allows you to be kind of real time, to be more thoughtful about kind of your investments, to provide more analytics. This is kind of what drives us ultimately, because this is the value that's kind of delivered to the kind of asset manager, and in turn to kind of the retail investor like you and me.
Wow, it's amazing, and it really just kind of brings back full circle what you folks are doing and how you're changing some of these how technology and digital transformation is changing some of these institutions to help with all of that, and then some of the work that FundGuard specifically is doing in achieving that. So, Lior, unfortunately, we're approaching the end of our time and the end of the conversation, and the end of the notes that we have here in front of us. But I do want to end with a couple of questions in the form of a quickfire round. So wow. I do want to shoot you some questions, and I want you to answer them as quickly and as briefly as possible, just to get an idea of your thinking and some of the systems in your brain, let's say, from financial systems to the brain systems. So I have a few questions in front of me. What's one technology that banks still rely on that should have been retired years ago?
Mainframes.
What's an AI trend you're most excited about?
Agents, ability for clients to interact kind of with systems in a more seamless and automated way.
What's one habit that makes you a better founder?
Composure.
It's important. I should remember that. One thing about financial infrastructure that people misunderstand.
They think it's bulletproof, but the reality is that it's very archaic and kind of a lot of holes that can be poked, and we need to improve that.
Brings me to my final question. What's the biggest risk to the financial system today?
Ultimately, it's security, right? Not allowing bad actors to kind of overtake information and misuse it.
Wow, amazing. Lior, thank you so much. I have one last question for you just now, which is, what is the best way for everyone to follow you or connect with you or keep up to date with the things that FundGuard is doing?
FundGuard.com, on LinkedIn, kind of follow FundGuard and myself. Happy kind of to meet also in the future and update on our progress. Thank you very much.
Wonderful. Lior, thank you so much for your time today and your insight. It was super interesting to learn about the legacy systems and about the founder journey that you folks went through beforehand and the things you brought to it, and some of the ways you folks are helping the asset management systems, but then also how that trails down to everyday folks and protecting their future. Thank you so much for your time and insights today.
Thank you very much.